Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Priya, Parrish, Managing Partner of the Impact Engine, to discuss what impact investing is and how it's advancing key initiative across multiple sectors. Priya, it's great to meet with you. Welcome to Trade Talks.
Great. Thanks for having me, Jill.
Let's start with impact investing and why it's becoming more important in today's environment.
Absolutely. Essentially, there's a number of different factors that are driving the growth of impact investing. One is that consumers and customers are demanding products and services that do better for the planet and for society. And so they're asking for companies to steer their businesses in this direction, to develop products that solve these issues. Everything from non-toxic chemicals to sustainable packaging, to diversity and inclusion as well in terms of who actually runs these companies. And the second thing is that there are certain risks that are coming from the lack of effective management of ESG and impact issues that corporations are having. So whether it has to do with climate risk and the liabilities that may come from not managing that correctly, or other issues, corporations themselves are being more proactive about how they manage this to both create a competitive advantage as well as avoid significant risks.
And Priya, in mid-October, Impact Engine announced the close of its first private equity fund. Tell us more about the Impact Engine and what the fund is designed to do.
Sure. Our firm, we manage venture and private equity investment strategies, including this fund. And across everything we do, we look for companies that are growing into be market leaders in their particular industry or sector. And we have a thesis that these companies are going to be the industry leaders because their products and services were intentionally created and designed to create better outcomes in the health, education, economic empowerment, or environmental sustainability. And that by designing products that have high efficacy around these areas for the customers that use them, that they will outcompete others in the industry and grow into industry leaders. And so in that respect, we're like any other investment firm in that we're looking to generate similar private equity and venture capital investment returns, but also real measurable and quantifiable impact in these areas.
What are one of your strategic investments?
Sure. In about a year ago, we invested in a company called Footprint International. They are based in Gilbert, Arizona, and they manufacture and sell sustainable packaging for the food industry. Their packages are fiber-based, zero plastic, and are used by customers like Conagra, Tyson, Beyond Meat, Sweet Greens, because their sustainable packaging not only is 100% biodegradable in a normal landfill, it'll also biodegrade in water. A lot of food packaging ends up in the ocean, and without having to change the customer behavior of having to compost and separate. And at the same time, their products have a very high degree of performance in terms of durability. Their products can hold water or oil for hours and not disintegrate. They can withstand temperature changes from the microwave to the frozen food aisle and still have quite a bit of strength and durability to hold the food effectively while eventually biodegrading completely in a modern landfill.
Oh, wow. That's pretty remarkable, that kind of technology. Impact Engine supports its companies in scaling impact alongside profits at this critical growth stage where tensions between the two goals can arise. How do you manage that?
Yeah, absolutely. Yeah, when we invest in growth stage companies, these companies are scaling in a way where they now have sometimes hundreds, if not thousands of employees. They have more complex supply chains. Even if they're manufacturing companies, they have many facilities. And so they need to think about impact from every business dimension in terms of the creation of the product, the way they sell, how they treat their employees and other stakeholders. And some of our principles to make sure that this is managed well is, first of all, just make sure it's a priority. Make sure from the very beginning, when we meet with those companies to the day we decide to invest, all the way to the end, that we're saying this matters just as much as your growth rate. This matters just as much as your margins. And so we have that conversation. We codify this through written impact commitment agreements, and we continue to ask about it and be a partner and help them. Not in a way we're expecting them to have it all figured out from the beginning, but that as partners, we're going to jointly always try to do our best to think about all stakeholders as we grow the business.
And finally, Priya, do you expect purpose-driven investing to continue on its growth path?
Absolutely. You know, whether it's millennials and Gen Z, to really just what society needs, quite honestly, like the government alone cannot solve our most pressing social and environmental issues. Philanthropy is quite frankly not enough. And if more corporations do the right thing by not creating as many of these externalities from the beginning, we all will be better. And I think investors are increasingly recognizing this. in public markets, there's some really strong early data as well, suggesting that this can actually lead to very strong financial returns. So I think for all these reasons, we expect it to grow quite a bit in the future.
All right. Thanks so much for the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you.